Hey guys, welcome back to the channel where we're trading options until we hit $1 million. And we have a lot of news this weekend. A lot of earnings reports came out over the last week, which has affected the portfolio, unfortunately, in a negative way, which we will get into later in the video. And as well as a few more earnings coming up this week, as well as some macro news going on in the world with the Iran war not seeming to come to an end, with them just declining Trump's peace proposal and Trump causing it an outrage. And he's tweeting a lot. But a lot has happened over the last 3 weeks since my last video. After again, just going over it over the last 2026 year to date, we are up 2.52%, or just about 7.5 grand, coming from a surely strong 2025 where we're up over 15%. But due to the earnings, and even though we did have some winners with some big AI companies during the rally these last 2 weeks or so, the past 3 weeks have been negative 1.59, including this Friday where we lost 0.7%, or just over 2 grand. So we are negative over the last 3 weeks, but still positive on 2026. And it's been fairly active. I mean, we sold our CRDO shares, we sold our NUE core shares, which we've been holding for over a year, collecting some dividends and some put premium, as I will get into later in this video, but collecting cash in the pocket over about 8 grand of realizations. So again, what is this channel? What is this video about? This is the wheels selling options. This is the main strategy of the channel, where we start at the top, we sell a put options. This is an income focused strategy where we start at selling puts. Then if the stock price drops below when we sold the contract during the date, then we have to buy 100 shares of that stock for every contract that we sold. And then I turn it around and I sell calls until the same thing happens on the upside. Once the stock goes past the strike that we sold the calls at, we have to sell at that strike price, and then we just continue the wheel and collect income. So macro update, what's been going on? Right now, stock futures are sliding between green and negative, because today, as I'm recording this on Sunday, May 10th here, Iran declined Trump's peace proposal, and Trump has been on Twitter just absolutely tweeting how it's an outrage and he's going to start bombing them, and how they will have to accept one. So he's been going off. So we'll see if Iran, caves into Trump's threats here, or if the war will continue and volatility will increase. Oil prices are going to continue going up if that happens. Stocks flat to negative, depending on how. If Trump keeps tweeting his peace next week, stocks rally, and then no more peace, stocks decline. So we'll see. We'll see where things go, but volatility will increase either way. Then another piece of the news is the hantavirus that's been making a lot of headlines, and that's been also will create volatility in the market, because people might think that this is the next global pandemic like COVID. Do I think it is? No. Do I think it's kind of overblown? Probably, but still something in the headlines and something that will create volatility. And this is the meme of the week. This is hilarious to me, because over these past 2 weeks, there's been a huge AI run up. You've seen on earnings, SanDisk, Micron, all these AI companies, IREN, just absolutely reporting earnings, reporting CapEx spend, AI, data centers, everything over the last quarter that's happened. And we want to sell during times like this. We don't want to be buyers of AI stocks that are up 3,000%. So current activity, CRDO Technologies. This is one that I have completely sold the shares off. I got assigned here at the 120 strike price back at the end of February. This was about a month and a half holds. This is a data center company that makes connectivities to data centers and high-tech components. They make cablings. A lot of data centers are switching off from fiber optic cables because they use a lot of energy. Fiber optic cables shoot lasers, creates heat, which expends a lot of energy, and they're switching to a cabling that CRDO Technology is producing, which is copper based, which saves a lot of power and is just more efficient. As well, they make other data center components as well. So this was a really nice win that I sold during the AI rally. What I did here was something new that I usually haven't done previously before. Is sold 75% of my position on the big run up. As you can see here, they just completely gapped up here in April, and on this first red about 165. I sold 75% of my position, so I had 200 shares, and then I kept 50 shares and I sold them right up here in the 186, 185 area mark. So cost basis, somewhere in the 170s, which resulted in about a 45% gain. Actually, over. This is an old screenshot, but good 1 month hold, and sold when RSI was in the overbought territory. So technicals were telling me that this stock might go down. And again, we're not chasing. I like this company, but I'm looking for maybe a nice gap fill or to come back to this 90-day SMA, and we'll be buyers again in the 140s, 130s. But if it doesn't, it is what it is. I am not chasing, but nice gain there. And Nucor Steel, this is another company that, even though it's not an AI company, it's the number one steel company in the U.S., which manufactures a lot of warehouses, and I think they call them. Oh, I can't remember what they call them, but the steel kind of like um, man, I don't know why I can't think of the name. Windmills? No, that's not it. But they manufacture a lot of steels and steel mills. That's what it is. They manufacture mills, steel mills, which serves as for buildings, for growth, and for these data centers and automotive industry as well. I mean, a lot of stuff is made out of steel, and these guys produce it. So they are not directly AI, but they profit from the boom of AI data center build out and development across the US. So since so much steel takes into it, they have absolutely exploded. They had a pretty strong earnings. I sold right before their earnings. I didn't want to wait to see the results, since it had a big pre-run up. But this is one that went into the long-term capital gains bucket here. We held it for about a year and a half, but finally got rid of our 100 shares, and I think it was about 30 or 35% profit in a year and a half. So I'm very happy with that, as well as collecting dividends along the way, selling select covered calls, and as well as our initial put premium that we collected when we sold it. So now Bitcoin. Bitcoin has been interesting. It has been in a steady rebound. It finally broke this resistance here, and that was about 75K, 72K around here, that it kept just bouncing between 60 and 72K. And right now it has a short-term resistance of, it's not on this chart, but the 180-day simple moving average. It keeps bouncing off it. So we'll see if it can finally break that. It's about at 82,500. So if it goes past 83, 84K, I think it's good to go from here to at least 90K, where it'll meet its next resistance here from these previous lows. But this is one that we have been continuing to trade here, continuing to sell additional puts and profit, collected more premium and opened up new ones here at the 43. We were trading this two ways. We were doing BitX, which is a leveraged product, which you needed to be careful for, and iBit, which is the iShares Bitcoin ETF, which I have way more capital in. But we are not selling calls here because Bitcoin, as you know, can absolutely rip. So I don't want to cap my upside here with covered calls. So we are continuing to sell puts, but not capping our upside with covered calls until I see some nice consolidation around the 90 area. Maybe then I will sell some covered calls on iBit, but not BitX. So that is Bitcoin, watching it closely, but continuing to stack and dollar cost average. If I get assigned on 43, I'll be happy. Will I think I will? No. But who knows? Anything can happen. And then another current activity one is Microsoft. This is the software sector. I've been considering trading IGV, which is the software sector broad ETF. But then I looked at its holdings, and a lot of it is like smaller companies, which I feel like AI can definitely replace. The whole reason for this absolute sell-off here from 2026 to date has been because people are freaking out about AI replacing all these software companies. But will AI replace Microsoft? No, I don't think it will ever replace something as big as Microsoft that not only has contracts all over the world, but also runs on basically every real operating system. I mean, they are not going anywhere, and no one's creating an AI to replace what they do. So I think this freak out has been definitely overblown. They did have their earnings report, so we are continuing to selling puts here, so just over 21% on that. Now, excuse me. Now going into a new one, McDonald's. This has been a very interesting company, which I've been eyeing for a little bit. They actually beat their earnings, but they had a huge gap down. We sold a $275 put here expiring in 30 days on June 5th, which we are down tremendously on right now. But um, something interesting has happened on McDonald's. It's not on this chart here also. The 180-day SMA has just touched that. It has not touched the 180-day simple moving average since 2024, where it saw a strong bounce up. And as you can see on this chart, the last time that it has touched the 275 area here around has been in February of 2025. And as you can see, it just absolutely ripped here. So I consider myself a value investor, and I did not see anything bad about their earnings. They are worried about the health of the consumer and consumer sentiment and their spending habits, but I think McDonald's will continue to do well, so I'm happy to get a sign at the 275 area. And as you can see also on this chart, the last time it's been in the oversold territory has been in the middle of 2025. So continuing to trade and monitor McDonald's. Next is Reddit. Reddit also had a triple beat on earnings. They have completely just, I don't know why they didn't gap them more on this earnings report. They beat on everything, on user growth, on revenue, and they had really good guidance as well for the future of the stock. But Reddit is interesting because they're also benefiting off of this AI boom. Reddit continues to grow. A lot of people use Reddit for machine learning that trains all these, the Gemini, the ChatGPTs, the Groks of the world. All these LLMs, language learning models, are training off of Reddit. If you've ever searched something, you most likely have gotten like a Reddit answer. And this has grown their revenue tremendously, as well as ad growth, user growth. So I'm selling an additional put here at the $150 level. Happy to get a sign. That's about the bottom of the gap there. So happy to get a sign there and lower my cost base, because my initial buy-in was at the 210. So lowering my cost basis here, down on the stock, but I think this is just a laggard, and it will catch up to the rest of the AI boom when its time comes. So now going into current portfolio, Palantir Technologies had their best earnings report ever, and yet the stock jumped a little bit, but has gone back down after. Now, why? Why has Palantir Technologies had its best earnings ever, but yet it has not exploded like some other stocks? One is the software part. The software sector has been getting hit pretty hard recently with all the AI news, but Palantir Technologies specifically has a very high price to earnings ratio. It was in the 200s and then 150s. Now it's around the 100 area mark, which is still pretty high. So what is that telling you? The stock price is high compared to what their earnings are. But why is it high? It's because people are expecting insane growth. And that insane growth is what Palantir has just delivered. So yes, it will take some time for the stock price, the price to earnings ratio, to go down to match kind of the industry, which is around 40, which, I mean, some people consider high. So still in the low hundreds. It is high, but it's because people are expecting to continue for continuous insane growth, which Palantir has delivered on. So I think this will just take time. I think it's in a consolidation zone. If they didn't have their best earnings ever, then I'd be a little bit more worried. But as you can see, it's still range bound, and I think we will go back in the 150s, and I will probably sell a covered call in my 160, 165 area. Now, Robinhood. This one missed earnings, mostly due to revenue stream from cryptocurrency trading. It was a lot lower than people were expecting, but that's because crypto prices have been down. If crypto prices are low, people are not trading as much crypto, and Robinhood is making less and less. So this is one that has pretty high crypto exposure, and I think that they will do completely fine. As you can see, they gapped down on earnings, but they have had a little bit of a rebound back to the high 70s. I think it's gonna get back in the 90s and potentially touch 100 here in the next few months. I mean, Robinhood, well, if Bitcoin and crypto prices continue to rise, I mean, Bitcoin needs to break its resistance at 82, 83K, go back to 90. More people are going to get into crypto. The crowd is always late. Trading volumes are going to be higher in their next earnings. It's going to be all back to normal with good revenue growth, including from their crypto segment. So not worried. Also kind of range bound. Had a little bit of volatility, a big run up pre-earnings, and then a huge drop down as well the week before, and now back to just trading to the side. Now, SoFi Technology is another portfolio hold that missed earnings, and this one, well, they beat earnings. They actually, but they had weaker guidance. They beat earnings, but had weak guidance. And the weak guidance was based on the health of the consumer. A lot of SoFi's revenues comes from loan origination. Even though they had insane user growth and users started using more of their products, their loan origination guidance, which is the main source of their revenue, their biggest market share, not market share, their biggest share is from loan origination. And if the interest rates stay elevated and consumer health is, especially with like oil prices right now, if consumer health gets lower, people spend less, people are buying less homes, people are taking less car loans out, then their loan origination revenues are going to fall because people are doing less of that because people don't have money to spend. So their guidance was a little weaker on that, which people freaked out on, and the stock dropped 12.5%. But it's trading below about in the 40 RSI mark, still holding the support here in the $15 mark. So unfortunately had a nice run up like Robinhood, but has dropped since and had unfortunately disappointing guidance on their earnings. But the new Fed chair is coming, so we'll see what he does with interest rates. So that's pretty much what we've gone over. The only ones that I didn't go over is NU, which is another steel stock that I just got assigned 500 shares on. So we'll update you on that week. NLY, which is a mortgage REIT that is a high dividend player, but that's a pretty small position, only selling a little bit of puts. Kroger, which pretty flat, not a high premium stock, just trying to get away from market beta and this AI run up. CCJ, which is a uranium stock, which has done pretty good, and I'm happy to own it. They just reported their earnings. And then Fast, which is a construction material company, which also has been pretty flat. Not a high premium, just trying to get away from market beta and these AI stocks. So yeah, thank you guys so much for tuning in, and I will update you guys next week.